Thanks.
Thank you.
Good to see you.
Pleasure.
The nice thing about this, Roberto, in 20 minutes, we can't waffle, right? We got to get to the point, which is great. So we're looking for 2 minutes or less, but a candid assessment in the trade climate of today, and for your section here, are we rolling back to the 1970s? That could be a wide definition of protected markets, right, without free trade, spiraling higher inflation, interest rates that went to 20 to 24%, depending on which economy you were working in, and a very protectionist environment at that period of time. We had the Arab oil embargo in the 1970s as well. Our game is not to be alarmist here, but our game is to focus on what is reality. It doesn't feel like the 1970s, but I'm not sure if you agree with me on that.
No, I entirely agree. I think first we're starting from different points. I think you mentioned, for example, oil prices, and the oil prices today, compared to where we were in the 70s, maybe it's not so different, but the effect that we had in the 70s was much more dramatic. So in the 70s, we kind of multiplied by 6 the oil prices in the course of a decade. I don't see today that kind of such a dramatic evolution in oil prices.
Also, the penetration of oil in the economy is less today than it was. It's about 30%, not 50, right?
Absolutely. In the 70s, the dependency on oil was much more acute. And the inflationary effect in the 70s was very much associated with this. Today, inflation predates what's happening out there in the world. It began with the supply chain disruptions across the globe, basically, after the pandemic. And these are things that I think can be maneuvered, can be handled in one way or another. Diversification of supply is one of them. I think we should avoid the trap of self-sufficiency. People talk a lot about that today. I think that's the wrong way to go. But there are other mechanisms in place. Interest rates. Back in the 70s, you started with a benchmark of around 7%. It kind of doubled in a few years' time. Now we are starting from almost 0. So the cost of capital today is nowhere near the cost of capital that you had back in the 70s. So
let's break down this thing with self-reliance and what's really behind it. We talk about onshoring or nearshoring, greater integration regionally, for example. Could that be used by corporations as an excuse to be protectionist now? And that's something you have a very good line of sight in your time at the WTO.
Yeah, it's a risk. It's a risk. During the pandemic, we said that. Trying to have the whole supply chain internalized and put into your own territory is definitely not the way to go for several reasons. First, because it doesn't improve resiliency. If you have an event or a catastrophe in your own country, what happens? You don't have other suppliers. So you're just shifting the dependency from one type of supplier to another, from an international to a domestic supplier. Second, it is fine if you are thinking of, onshoring things on which you are competitive. You'll still be competitive, and the prices are going to be level with the international market. But if you're not competitive, you're just introducing inefficiencies, you're introducing costs that society and the economy will pay for. So I think it's the wrong way to go, like I said before. I don't think that it's doable, frankly, but it is a risk because having the market, set aside for your own products or corporation without having to compete with third parties, it's always very tempting. And once you introduce these mechanisms to have the production protected and done onshore, it's very difficult to dismantle them.
Good. Why don't you share the PepsiCo example then? Because in a sense, you're a global corporation, obviously a global brand, but you have to act local in markets. So is this feeding into PepsiCo at all in terms of getting access to supplies or the cost of supplies going up through the value chain?
We are also a very local food company, right? So a lot of what we produce It goes all the way from the farm to the shelf locally. So we produce locally, we manufacture locally, we transport and distribute locally, and we sell locally. But there are some things that we, of course, some ingredients, flavors, and other things that we do shift around globally. So for us, integration and making sure that the economy is, or the climate, the environment is favorable for investments and for operation is fundamental. What we fear the most is fragmentation of the economic environment and fragmentation of policies, because that's what introduces unnecessary costs and end up disrupting the operations of the company.
You know, you're in corporate affairs, but I think it'd be great to share with this audience in particular, are you seeing the price pressures within that value chain today? What sort of differences are you seeing for farm product, for example, for vegetable oils and the like? Are you seeing the pressure and you're having to pass it on to the consumer?
Absolutely, absolutely. Inflation is very much widespread. It's not only on the input, so clearly commodity prices are going up and we are affected by that. Corn prices have gone up, oat, potatoes, everything has gone up. Oils, as you mentioned, have gone up. But not only. So the price of freight has gone up.
Yes.
The difficulty to get containers, the difficulty to get even the ships, supply ships, the routes have become more uncertain. There is rupture in terms of the routes. All that we have to adapt to, and those are introducing costs that unfortunately we need to pass on to the market. I mean, there is no way that we can absorb all that. I mean, we have absorbed some.
Is that short term, though? I'm really curious. This is a very interesting vantage point. Is it going to stay with us? Because a lot of people have been saying here at the World Government Summit, this is a cycle of maybe 12 to 18 months, and then we're done with it because the supply chains are broken. But do you agree with that?
I don't agree or disagree. I think it's very optimistic.
Yeah.
That we would see this page turned in a year or a year and a half. Most people that I talk to and who are familiar with the situation in different markets, commodity markets and others, tend to see this as more like a 2 or 3 year minimum situation.
Yeah. At a 7-8% range, you think, as well?
It could be.
Wow.
It could be. I don't know. I would be speculating big time.
No.
But we are not convinced that this is a situation that is going to be normalized in just a few months. One of the reasons being, this doesn't come from the disruption that we have now, given the Russia-Ukraine, situation. We are talking about something that predated that. It came, the supply chain disruption started with the pandemic. So plants of manufacturing were closed. There were borders being closed on the exports of raw materials, on the exports of even food in some situations. So this is a situation that is much more far-reaching than a localized pressure here and there that is spiking the inflation in some way in the short term.
I thought we would be much more resilient, to be honest with you. I'm surprised that the supply chains are taking so long to rebuild, aren't you? Considering how globalized we were, I know we had that lockdown, but commerce didn't freeze. But what's the connection here? Is it we're too dependent on many other players around the world, and that's why people are willing to go near shore?
I think we could be more resilient if it were a localized shock. Supply shock in one region, in one particular geography. But that's not the case. With the pandemic, it was global.
Yes.
It was global. It was not only the supply chains in terms of transportation or logistics or a particular geographic event, that a drought or some disaster or an earthquake. It was not that. It was across the board. It affected everyone. It affected the domestic economies. The labor markets were affected. It was a major effort for corporations like ours to adapt to all these things and still continue production in the levels and the efficiency that we had before. It was a major,
the workforce was frozen out, basically, at manufacturing facilities. I wanted to talk to you at a bigger level about the tensions as a result of Russia and Ukraine. We're having a lot of interesting discussions off of many different panels looking at the impact politically. But let's start with the grain supplies. Brazil, you said, is very interesting. Your home market, your home country, is good at producing some farm products, but they kind of left wheat to Russia and Ukraine. So did we learn a very painful lesson out of that?
Well, somewhat, yes. It was clear when Brazil was developing its agricultural powerhouse, right? Brazil became one of the big suppliers globally. It was clear that they could not produce everything efficiently at the same time. So wheat was expensive to produce in Brazil, but not soybeans, not corn, not other products that they were more competitive. So they decided, you know what, instead of spending a lot of money on subsidies producing wheat, let's produce what we can and what we are good at. Let's sell those, and with the money that we make, you know, we have international reserves, and now we import the wheat from cheaper and from areas that are more competitive here. So that's essentially what they did. These days, wheat prices go up and you begin to hear people saying, well, maybe was that the right call?
Yes.
Shouldn't we have some wheat production here? And there is no, recipe that you can say, okay, for everyone, this is what you do.
What surprises me, I'd love to hear your thoughts on it though, the Food and Agriculture Organization of the United Nations, right? The World Food Program. Why aren't we better at global mapping to manage risk today? Or we just got very comfortable with globalization?
I think we're better off than we were before. That for me is very clear. So we'll have alternatives of supply. The markets are much more responsive than they were before. There's much more integration today. But it's not perfect. And I don't think it's ever going to be perfect. The moment that you have the global economy is so well integrated, any shock, any disruption that you feel in some place, it's going to reverberate across the whole chain of supply. So it's not like bilateral trade deals when things are happening around the world and nothing affects that particular deal. These days, anything that happens in the world is going to be felt somewhere. And, but we're better equipped, I think, to handle these things because we have alternative supplies, we have alternative mechanisms, even financing mechanisms. Today, the market is much more integrated, much more resilient, I think, than it was before.
Good. It would be excellent to get your thoughts on the implications from Russia, Ukraine, from the dollar reserve standpoint. The U.S. has been, under Donald Trump and even under Joe Biden, very aggressive with sanctions on many different countries around the world. Venezuela, Iran, Russia because of Crimea, even to a lesser degree with China. There's a lot of things at play here. If you push that envelope too much, like in the case of Russia right now, it's looking for alternatives and it's finding one with the renminbi. Could that trigger a transition away from the dollar-dominated reserve status that it holds today?
I think there will be ripples. Every time that you introduce sanctions, no matter the nature of the sanctions, a lot of the sanctions were based on trade relations. Right?
Yes.
So you would prohibit exports or imports from a particular country. In this situation, I suppose because Russia was not so well interconnected with the other economies, except for the energy sector, the sanctions took a different direction. To be effective, they took a different direction. It was not only about trade, it was about much more. When you do that, the markets react, and they will react differently, trying to find alternatives, trying to find different channels. The consequences of that, I don't think anybody in the beginning could tell what they are. Today, there are a number of options out there. We have to be attentive to all of them. We don't want to have consequences that were unforeseen.
Well, doesn't Beijing kind of want this to happen, though? Doesn't this give them a good reason to flex their muscles? I see they're at the New Development Bank, which you're well aware is the BRICS Bank. They're listing bonds in renminbi. They want to pay the oil and gas that's coming from Saudi Arabia in renminbi. Russia wants to take rubles in. This could be the break of the dike if you're not careful, correct?
Well,
or is that a healthy thing?
The diversification of currencies in international trade and finance is not new. I mean, this has happened before. You know, ever since the dollar left the gold standard,
yes,
there were a lot of accommodations happening. The euro has been there for a while, and the US dollar never really lost its potential of being a reference currency. I think we may see some of that, but in the very near future, I don't think that the dollar is going to lose its reference power, its ability to be the standard of markets and prices across the globe. I think we will see some new developments, but new developments that actually change the system,
right,
that change structurally the way that we do financing. In my view, you have two great panelists coming up,
yes,
from this market that will give you better insight. But from my perspective, I don't think that we're quite there yet. There's still a way to go.
We have 3 minutes left. I'd love to give your insights of going, say, from as a director general, somebody that was in public service, into the private sector, and how they interlink. What are you bringing to the party for PepsiCo, and what is PepsiCo relying on you for? It is a global corporation that wants to see supply chains cleared, wants to have good trade relations, wants to be a good citizen in different markets. What's the experience so far? It's been, what, less than 2 years?
Yeah, it's been a year and a half. A learning curve, I would say, both from me and PepsiCo. So we're learning from each other. It's really interesting. The culture, the way that we think. I think in the public sector we are much more medium and long term oriented. Yeah. Companies are more immediate, term oriented. But not only. What I thought was very instructive for me was to see how companies that from the outside you think they're only thinking about the quarterly results and the dollars and cents, they're not. I mean, right now companies have taken on a much bigger role, I think, in society
even
today.
On climate, I would say, right?
Climate, I mean, PepsiCo has just launched our Pep Positive program, which is completely transformational. It's about transforming everything we do in every area of the productive system, looking at not only the performance of the business, which continues to be absolutely fundamental, but also looking at the impact that the company has on people, on the societies, on the communities that we are operating in, on the planet. The resources that we're taking in, we want to put them back to the planet. We want to avoid carbon emissions. We have today a target which...
Is that just being a good citizen, or is it the pressure of the consumer today that's much more aware, or becoming more aware?
I think both.
Right.
I think that not only the pressure of the consumer, the pressure of our own associates. The people who work at PepsiCo, they want to see the company responding to these concerns. They want to see the company being a force for good. And this is something that permeates from the front line all the way to the CEO. I think, and that was something that surprised me. It's a huge company, a global company, but with a very clear vision about what they want to achieve in these areas, and that's something that I think is transformational. I think if you look forward, governments and the private sector should be playing this role together much more. The companies are more, they're faster than governments to react.
Yes.
They think long term. Governments are often caught up with the electoral cycles.
Yes.
They have a very wide-reaching impact. They affect the whole supply chain for us, from farm all the way to the shelf. So the things we do affect the chain of the supply chain in a very impactful manner. And this is something that we have not explored yet. I think the participation of companies in figuring out the future, figuring out how do we respond to challenges like inclusiveness, like more symmetry in the labor market, like the environment, sustainability, carbon emissions, water, replenish. Water is going to be a huge problem. It already is in many areas of the world. So I think companies have a role to play here. It's time to have a new a social contract. You know, we have to revise the way that
between the public, major corporations and small and medium-sized enterprises, but the international governmental organizations, if you can, did you find it frustrating you couldn't move any IGO faster? I mean, the WTO is pretty clunky and it has a lot of members and vested interests. Was that your biggest frustration there, would you say?
I think the WTO in particular is a very unique international organization. Unique in the sense that when it functions, when it makes rules, they apply. I mean, they're not just inspirational.
Right.
They really apply. You have a dispute settlement mechanism. At the end of the day, you can impose sanctions on another country because it's not fulfilling the recommendations of the panels and the arbitration. So it does have a very meaningful impact. On the other hand, it's very unique also because it only decides by consensus. So all 164 members have to agree for anything to happen in the WTO. In these times, you find that fragmentation, political fragmentation, geopolitical tensions, this is complicating the way that the WTO operates. To get consensus, it's very, very difficult at this point in time. So it's very challenging. So at the same time that you have something, one instrument that can be very powerful, very impactful, it does require some degree of collaborative spirit among nations to make things happen.
And I would say that's wanting today, right?
Yeah, that's a rare commodity.
It's a rare commodity. Nice round of applause for Roberto Azevêdo, the former Director General of the WTO and now the Head of Corporate Affairs for PepsiCo. It's good to see you again.
Thank you, John.